Okay, Sony and John, it was wonderful to have you on this panel, and we would just like to extend your ideas what to do next concerning the fight on global economic crisis, and maybe with the aspect on green economy as well.
Sure. Thank you. I look forward to your questions. Okay. Let's start again. Reset. So what you have in the world today is about $5 trillion of money that is in sovereign wealth funds, which are funded by the sale of oil and gas. So if you were a country such as Norway that owned such a fund, you know that the size of the fund will depend on the future price of oil and gas. So the single biggest risk you have is that of oil and gas. Yet, despite this, many of these funds still go and buy oil and gas stocks, so they are doubling up their risk. That combined with the fact that unlike pension funds which have to make payouts, the Norwegian Sovereign Wealth Fund doesn't owe anybody any money. So it can be making investments for 20 years, for 30 years, and far too much of it is invested in OECD countries, in developed countries, in 92% of it. So you take all these together, and this makes this $5 trillion of sovereign wealth fund money as the money of first choice to fund the green transition, because you first and foremost, by making green investments, reduce your oil and gas price risk. So it is good for the fund. Second, because you're a long-term investor, longer term even than pension funds, it means that you should be investing in infrastructure and you can be earning a liquidity premium. And third, because far too many of the investments of these funds are in developed countries, they will diversify by actually, for example, funding the green transition in countries such as India, where 300 million people have no access to electricity. So it tick marks all the three boxes, and these funds in turn will both get a higher return and reduce their risk. So there is more than enough money floating around to fund the green transition, and this being the most obvious example.
Okay, very good. Let's take the Norwegian fund. Who would be a very concrete partner in any developing country as to do a best practice and first model?
All the IFIs, the World Bank, the Asian Development Bank, the European Investment Bank, etc., have country offices in many of these developing countries, have a long history of making investments in socially useful activities in infrastructure. And they would be the perfect partners of first resort together with the domestic governments. In India, the government is trying a joint venture with the State Bank of India, the Finance Ministry, and the Sovereign Wealth Fund of Oman in order to invest in Indian infrastructure. These sorts of models are very promising and can move quickly.
Thank you so much. John, basically the same question to you. Which are your ideas to change the crisis as soon as possible?
Well, we have to, I think, do three things. One of them, and I agree with what Sony was just proposing, that we have to try and harness our own workers' capital to be patient capital, but also to be socially useful capital, which can help finance infrastructure investment, finance the transition to a green economy, and actually finance jobs. So I totally agree with many of those propositions. We have to put our own money where our mouth is. I think we also, particularly in some of the crisis areas, and the Eurozone is still a crisis area, we have to change the narrative away from austerity, away from the simple fact that economies, more competitiveness, reducing wages is the solution, to raising wages. I mean, here in Germany, we have to, I think, have a major rise in wage if we're not going to be locked in a perpetual spiral of deflation with the countries in southern Europe actually losing their purchasing power. Thirdly, we have to actually, I think, show the inconsistency between the policies of so many of the international institutions, which now at least accept that rising inequality is part of the problem, not part of the solution. We've had 30 years of the top 1% in many countries really gaining the large proportion of actual gains in income. We have to break into that view and say now, okay, they also have to change their policies, because these institutions are undermining collective bargaining, they're undermining minimum wages, they're weakening employment protection. Those are all the institutions, and unionization in general, which reduces inequality. So pushing ahead now to make the connection between the problem, which is rising inequality, and the solution, which is stronger collective bargaining and raising wages at the bottom. I think that's our key objective, which can make an enormous difference in the period ahead.
Wonderful. Also to you the question, would you have like any perfect partnering that you could imagine inside Europe to do a best practice model and to start out?
Well, I think the solutions in Europe, in different ways, also lie in some of the successful models. I mean, we've been talking a lot about the Nordic model. Everything is not perfect in the Nordic countries, but it's a model which has survived time, which has actually stood the test of time. Strong social bargaining, social partnerships, strong collective bargaining systems have actually put those countries in a much better situation than an extreme Anglo-American model of deregulated labour markets. Similarly, in Germany, I think we have to win the argument about what really happened in 2008-2009, which was trust between the social partners, between unions and actual employers, which kept workers at work, which allowed deals to be done. It wasn't the fact of labour market flexibility or former structural changes. And that's the way in which some of our opponents have tried to capture the argument, but saying that the only thing that counts is structural adjustment. So I think translating some of those examples on the ground which exist and show the role of unions and winning the arguments is key in the future. And I think that means also working with wider groups in civil society who support our objectives and aims, and indeed, when we can, reaching agreements with employers, which is also the job of unions as well as fighting them on many occasions.
Wonderful. One last question. Would you or are you aware of any tendencies in one of the Nordic countries to actually go and test the model of the unconditional basic income? I was at the GLU last week, and they actually presented numbers that in Denmark and Sweden, actually 50% of the household income is redistributed by the state. So these would be the nations that could actually set an example.
Well, I think it's very interesting to look at what's happened since 2008. And until the figures, the only figures we have are up to on income distribution are up to 2010, 2011. So we're waiting for new figures to come out. But I think since the crisis, the rise in pre-tax inequality in the majority of OECD countries was actually enormous. It rose in 3 years inequality, the same as the previous 12 years beforehand. But what did happen, and this was true in the European countries, was that the welfare state redistribution mechanism, tax, social benefits, actually dampened that rise in inequality. So you didn't see an enormous post-tax, post-benefit increase. Now, the problem is 2010 governments shifted from supporting welfare states to attacking them through austerity. So we suspect we're going to see actually a worsening now of inequality when we see the new figures. So our challenge really with the Nordics is to ensure that the good arguments about a strong welfare system and the need to protect social protection systems are won now, using them as an example. So I think, again, winning the arguments is absolutely key.
Thank you so much.